Assalamu alaikum wa rahmatullahi wa barakatuh, dear brothers and sisters. Welcome to this enlightening discussion on the rise of Islamic finance in today's economy. In this video, we'll dive deep into the incredible growth of Islamic finance and explain how the concept of a halal credit card works. If you've ever wondered how Islamically compliant financial solutions are reshaping the world, stay tuned. The growth of Islamic finance. Islamic finance has witnessed a remarkable transformation over the past few decades, becoming a cornerstone of ethical and sustainable economic systems. Rooted in the principles of Sharia, or Islamic law, this financial model has transcended its early origins to become a global phenomenon, appealing to individuals and institutions across diverse cultural and religious backgrounds. The growth of Islamic finance is not just a reflection of its ethical foundation, but also its adaptability and resilience in addressing modern economic challenges. At the heart of Islamic finance lies the principle of Tawheed, the oneness of Allah, which shapes every aspect of this system. Unlike conventional finance, which often prioritizes profit maximization above all else, Islamic finance is deeply committed to justice, equity, and social welfare. This commitment is enshrined in its prohibition of riba, interest, its emphasis on risk sharing, and its requirement that all transactions involve tangible assets or services. By aligning financial practices with moral values, Islamic finance has carved out a unique niche in the global economy. The roots of Islamic finance can be traced back to the early days of Islam, when the principles of trade and commerce were guided by the Quran and the Sunnah of the Prophet Muhammad, peace be upon him. For instance, the Prophet strongly emphasized the importance of fairness and transparency in transactions, warning against practices like gharar, excessive uncertainty, and maysir, gambling. These principles laid the foundation for a financial system that prioritizes ethical conduct over speculative gains. Over the centuries, Islamic finance evolved in response to changing economic realities, blending traditional principles with innovative practices. In the modern era, its resurgence can be attributed to the efforts of Muslim scholars and economists who sought to create alternatives to the interest-based systems dominating global finance. The establishment of the first modern Islamic bank in the 1970s marked a turning point, setting the stage for the industry's rapid expansion. Today, Islamic finance is a global industry with a presence in more than 70 countries. It encompasses a wide range of services, including banking, insurance, takaful, and investment products, all designed to comply with Sharia principles. The industry's growth has been fueled by several factors, including the rising demand for ethical financial solutions, the increasing wealth of Muslim-majority countries, and the global shift towards sustainable development. One of the most striking aspects of Islamic finance is its ability to thrive in both Muslim-majority and non-Muslim-majority countries. In Muslim-majority countries like Malaysia, Saudi Arabia, and the United Arab Emirates, Islamic finance is often the dominant or co-dominant system, supported by governments and regulatory bodies. Malaysia, for instance, has positioned itself as a global hub for Islamic finance, with a well-developed legal framework, a vibrant sukuk, Islamic bond market, and a commitment to research and education in this field. Meanwhile, in non-Muslim majority countries, Islamic finance is gaining traction as an ethical alternative to conventional systems. The United Kingdom, for example, has become a leading center for Islamic finance in Europe, with London hosting numerous Islamic financial institutions and events. The UK government has also issued sovereign sukuk, demonstrating its commitment to supporting this growing industry. Similarly, countries like South Africa, Hong Kong, and Luxembourg have embraced Islamic finance, recognizing its potential to attract investment and promote financial inclusion. The appeal of Islamic finance extends beyond its ethical foundation. In the aftermath of the 2008 global financial crisis, many observers began to question the sustainability and fairness of conventional financial systems. Islamic finance, with its emphasis on risk-sharing and asset-backed transactions, offered a compelling alternative. By avoiding excessive speculation, and ensuring that all transactions are tied to real economic activities. Islamic finance has demonstrated resilience in the face of economic downturns. For example, during the global financial crisis, Islamic banks outperformed their conventional counterparts in terms of stability and profitability. This resilience can be attributed to the risk-sharing nature of Islamic financial contracts, which aligns the interests of all parties involved and reduces the likelihood of defaults. Furthermore, the prohibition of riba prevents the accumulation of unsustainable debt, a key factor in many financial crises. In addition to its stability, Islamic finance is also contributing to global efforts to promote sustainable development. The industry's principles are inherently aligned with the United Nations Sustainable Development Goals, SDGs, particularly those related to poverty alleviation, economic growth, and environmental sustainability. For instance, Islamic microfinance programs are helping to lift millions of people out of poverty by providing interest-free loans and other financial services to underserved communities. Similarly, green sukuk are being used to finance renewable energy projects and other environmentally friendly initiatives. Despite its impressive growth, Islamic finance faces several challenges that must be addressed to ensure its continued success. One of the main challenges is the lack of standardization in Sharia interpretations, which can create confusion and inefficiencies in the market. While efforts are being made to harmonize standards through organizations like the Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, and the Islamic Financial Services Board, IFSB, there is still work to be done in this area. Another challenge is the limited awareness and understanding of Islamic finance among the general public, particularly in non-Muslim majority countries. To overcome this, stakeholders in the industry must invest in education and marketing efforts to highlight the benefits of Islamic finance and dispel misconceptions. This includes engaging with policymakers, academics, and the media to promote a better understanding of the industry's principles and practices. Technological innovation also presents both challenges and opportunities for Islamic finance. On one hand, the rapid pace of technological change is creating new risks and uncertainties that Islamic financial institutions must navigate. On the other hand, technologies like blockchain and artificial intelligence have the potential to revolutionize the industry by improving efficiency, transparency, and accessibility. For instance, blockchain can be used to enhance the traceability of transactions, ensuring compliance with Sharia principles. Similarly, digital platforms can expand access to Islamic financial services, reaching underserved populations and promoting financial inclusion. Looking ahead, the future of Islamic finance appears bright. With a growing global Muslim population, increasing demand for ethical financial solutions, and rising awareness of the industry's benefits, Islamic finance is poised for continued expansion. Moreover, the industry's alignment with global trends like sustainability and digitalization positions it as a key player in the future of finance. The growth of Islamic finance is not just a success story for the Muslim world. It is a testament to the power of values-driven finance to create a more equitable and sustainable economic system. By staying true to its principles while embracing innovation and collaboration, Islamic finance can continue to thrive in the years to come. Next, understanding halal credit cards. The concept of a halal credit card is one of the most fascinating aspects of Islamic finance. It serves as a powerful example of how modern financial tools can be adapted to meet the ethical and spiritual needs of Muslims while remaining functional and effective in today's economy. To understand the mechanics of a halal credit card, it is important to first recognize the central Islamic principle that governs all financial transactions: the prohibition of riba, interest. In conventional credit cards, interest is charged on unpaid balances, and this forms a significant portion of how banks and financial institutions generate revenue. However, in Islam, any form of interest is considered haram because it exploits individuals and creates unjust wealth accumulation. This creates a challenge. How can a credit card exist without relying on interest? Halal credit cards achieve this by utilizing alternative financial structures that comply with Sharia principles. One of the most common models employed is the Tawarruk system. Tawarruk involves the purchase and sale of commodities to facilitate cash flow without resorting to interest-based loans. Here's how it works in the context of a halal credit card. When a cardholder uses their card for a purchase, the financial institution acts as an intermediary. It buys a commodity on behalf of the cardholder and immediately sells it to a third party for cash. The cardholder then owes the institution the cost of the commodity, plus a pre-agreed profit margin, which is treated as a service fee rather than interest. This ensures the transaction remains compliant with Sharia law, while providing the functionality of a traditional credit card. Transparency is a cornerstone of halal credit cards. Unlike conventional credit cards, which often include hidden fees, compounding interest rates, and penalties that can trap users in cycles of debt, halal credit cards clearly define all charges up front. Users know exactly what fees they are paying and why. These fees might include an annual maintenance charge, a service fee for processing transactions, or a late payment fee that is not punitive, but rather a fixed administrative cost designed to cover the bank's actual expenses. By eliminating ambiguity and ensuring fairness, halal credit cards embody the Islamic value of justice in financial dealings. Another distinguishing feature of halal credit cards is their alignment with ethical spending. They often come with built-in restrictions to ensure that the card is not used for activities deemed haram, such as gambling, alcohol, or other prohibited industries. This aligns with the broader goals of Islamic finance, which seeks to promote social responsibility and avoid contributing to harmful or unethical economic activities. In practice, this means that the financial institution may monitor transactions and decline those that violate Sharia principles. While this might seem restrictive to some, for practicing Muslims, it is a welcome safeguard that helps them adhere to their faith in their day-to-day financial interactions. The benefits of a halal credit card go beyond individual convenience. They also have broader economic implications. For one, they promote financial inclusion by providing Muslims with a way to participate in modern economic systems without compromising their religious beliefs. In many cases, Muslims may avoid conventional credit cards altogether because of the interest factor, which can limit their financial options. By offering a Sharia-compliant alternative, halal credit cards empower these individuals to access credit, manage cash flow, and participate in e-commerce and other modern financial activities. Moreover, halal credit cards embody the principle of risk sharing, which is fundamental to Islamic finance. Conventional credit cards place the burden of risk entirely on the cardholder, who must pay interest on outstanding balances regardless of their circumstances. In contrast, halal credit cards often incorporate risk-sharing mechanisms. For example, if a cardholder defaults on their payment, the financial institution absorbs some of the risk rather than imposing punitive interest rates. This approach reflects the Islamic ethos of compassion and mutual support, which seeks to create a more equitable financial system. From a practical perspective, halal credit cards offer many of the same conveniences as conventional ones. They can be used for online shopping, booking travel, paying bills, and other everyday transactions. They often come with additional features such as reward programs, cashback offers, and travel insurance, provided these perks comply with Sharia principles. For instance, reward points might be redeemable for halal goods and services, ensuring that the benefits remain consistent with Islamic ethics. The development of halal credit cards is a testament to the adaptability and innovation of Islamic finance. It demonstrates that Sharia-compliant financial solutions are not only possible, but also competitive with their conventional counterparts. As demand for ethical finance grows, financial institutions are investing in the research and development of products that cater to the needs of Muslim consumers. This has led to significant advancements in the design and functionality of halal credit cards, making them increasingly popular in both Muslim-majority and non-Muslim-majority countries. One of the reasons for the rising popularity of halal credit cards is the growing awareness among Muslims about the importance of adhering to Islamic principles in all aspects of life, including finance. As more people seek to align their financial habits with their faith, the demand for Sharia-compliant products continues to rise. This is particularly evident among younger generations, who are more conscious of the ethical implications of their financial choices and are actively seeking alternatives to conventional banking. In addition to meeting the needs of individual consumers, halal credit cards also benefit businesses and merchants. By accepting halal credit cards, businesses can expand their customer base to include a growing segment of consumers who prioritize Sharia compliance. This not only boosts sales, but also enhances the business's reputation as an ethical and inclusive enterprise. For merchants operating in Muslim-majority countries or areas with significant Muslim populations, offering halal credit card payment options can be a strategic advantage. The success of halal credit cards also underscores the broader potential of Islamic finance to address some of the shortcomings of conventional financial systems. By emphasizing fairness, transparency, and social responsibility, Islamic finance offers a model that resonates with many people, regardless of their religious background. Halal credit cards are just one example of how these principles can be applied in practice, providing a glimpse into the future of ethical finance. In conclusion, the halal credit card represents a remarkable fusion of modern financial innovation and timeless Islamic values. It provides a practical solution for Muslims seeking to navigate today's complex financial landscape without compromising their faith. By eliminating interest, promoting transparency, and aligning with ethical principles, halal credit cards embody the ideals of Islamic finance in a tangible and accessible way. Their growing popularity is a testament to the universal appeal of these principles and their potential to create a more just and equitable financial system for all. The adaptability of halal credit cards to various financial and economic scenarios further underscores their relevance in modern markets. Their design reflects an understanding that financial products should serve not only as tools for economic transactions, but also as instruments of social responsibility and ethical conduct. This is particularly important in an age where global financial crises, income inequality, and unethical banking practices have led to widespread mistrust in conventional financial systems. By offering a clear and ethical alternative, halal credit cards contribute to restoring confidence in financial institutions and creating a more inclusive economy. One of the key factors driving the development and adoption of halal credit cards is the increasing sophistication of the Islamic finance sector. Financial institutions offering these products are collaborating with Sharia scholars, economists, and legal experts to ensure that their operations and structures remain compliant with Islamic principles. This multidisciplinary approach ensures that the products are not only religiously acceptable, but also financially viable and competitive. The rigorous process of Sharia certification adds an additional layer of trust and reliability, making halal credit cards attractive to consumers who prioritize ethical considerations. Furthermore, halal credit cards have proven to be effective in promoting financial literacy among users. Many providers offer educational resources and workshops to help customers understand the principles of Islamic finance and how to use halal credit cards responsibly. This focus on education aligns with the Islamic emphasis on knowledge and personal accountability, empowering individuals to make informed financial decisions. For example, users are encouraged to avoid unnecessary debt, budget their expenses carefully, and make timely payments to avoid penalties. This proactive approach to financial management contrasts with the often predatory practices of conventional credit card providers, which may encourage overspending and reliance on debt. The impact of halal credit cards extends beyond individual users and businesses to influence broader economic trends. By discouraging interest-based lending and speculative activities, these cards contribute to a more stable and resilient financial system. Their alignment with tangible assets and real economic activities reduces the risks associated with financial bubbles and unsustainable debt. This stability benefits not only Muslim-majority countries, but also global markets, as the principles underlying halal credit cards can be applied universally to promote responsible economic behavior. For financial institutions, offering halal credit cards represents a strategic opportunity to tap into a rapidly growing market. The global Muslim population, estimated at over 1.9 billion, constitutes a significant and underserved demographic in the financial sector. As awareness of Islamic finance continues to grow, so does the demand for Sharia-compliant products. Institutions that invest in the development and promotion of halal credit cards are well-positioned to gain a competitive edge in this expanding market. Moreover, the principles of Islamic finance appeal to non-Muslim consumers who value ethical banking, further broadening the potential customer base. Technology has also played a crucial role in the evolution of halal credit cards. The integration of digital platforms and mobile applications has made these products more accessible and user-friendly. Customers can now apply for halal credit cards online, manage their accounts through mobile apps, and access support services 24/7. These technological advancements enhance the customer experience and ensure that halal credit cards remain relevant in an increasingly digital economy. Additionally, innovations such as contactless payments, virtual cards, and blockchain technology are being explored to further improve the functionality and security of halal credit cards. The success of halal credit cards is a testament to the broader viability of Islamic finance as a solution to modern financial challenges. It demonstrates that ethical and faith-based principles can coexist with economic efficiency and innovation. As more financial institutions recognize the value of this approach, it is likely that we will see continued growth and diversification in the range of halal financial products available. From savings accounts and investment funds to insurance and retirement plans, the possibilities for Sharia-compliant finance are virtually limitless. Halal credit cards also have the potential to bridge cultural and economic gaps, fostering greater understanding and cooperation between different communities. By showcasing the ethical and inclusive nature of Islamic finance, these products can challenge misconceptions and stereotypes about Islam and its teachings. They provide a practical example of how Islamic principles can contribute to the global economy and benefit people of all backgrounds. This cultural impact is particularly significant in today's interconnected world, where mutual respect and collaboration are essential for addressing shared challenges. The continued success of halal credit cards depends on ongoing innovation and adaptation. As consumer needs and preferences evolve, providers must remain responsive and proactive in developing new features and services. For instance, environmental sustainability is becoming an increasingly important consideration for many consumers. Incorporating green initiatives, such as supporting eco-friendly projects or offering incentives for sustainable spending, could further enhance the appeal of halal credit cards. Similarly, partnerships with halal-certified businesses and organizations can create added value for users while strengthening the broader halal economy. In addition to innovation, transparency and accountability will remain critical to the credibility and success of halal credit cards. Financial institutions must uphold the highest standards of integrity and ensure that their operations remain true to the principles of Islamic finance. This requires robust oversight mechanisms, regular audits, and open communication with consumers. By maintaining these standards, providers can build lasting trust and loyalty among their customers. The rise of halal credit cards is not merely a financial phenomenon, it is part of a larger movement toward ethical and inclusive finance. It reflects a growing awareness of the need for economic systems that prioritize fairness, sustainability, and social responsibility. As this movement gains momentum, halal credit cards will continue to play a pivotal role in shaping the future of finance, offering a compelling alternative to conventional credit cards and setting a standard for ethical financial practices worldwide. Ultimately, halal credit cards represent more than just a financial tool. They are a reflection of the values and aspirations of a global community seeking to align their economic activities with their faith and ethics. They demonstrate that it is possible to balance modern financial needs with spiritual and moral principles, creating a financial system that serves not only individual interests, but also the greater good. As the world continues to grapple with complex economic challenges, the principles underlying halal credit cards offer a source of hope and inspiration for building a more equitable and sustainable future. Why they rise now? The demand for ethical finance has experienced a significant surge in recent years, driven by an increasing awareness of the moral and social implications of traditional financial systems. This shift has coincided with a growing recognition of the stability, inclusivity, and fairness offered by Islamic finance principles. The modern world is witnessing an unprecedented interest in systems that align with ethical values, and Islamic finance is at the forefront of this movement. One of the primary reasons for the rising prominence of Islamic finance is its foundation on principles that prioritize justice and equity. In a world grappling with economic instability, social inequality, and environmental concerns, Islamic finance provides an alternative that resonates with a broad spectrum of individuals and institutions. Its prohibition of riba, interest, emphasis on risk sharing, and focus on ethical investments make it a compelling choice not only for Muslims, but also for those seeking financial systems rooted in moral and ethical practices. The prohibition of interest, a cornerstone of Islamic finance, addresses one of the most contentious issues in conventional financial systems. Interest-based transactions often create an unequal dynamic, benefiting lenders at the expense of borrowers and perpetuating cycles of debt and poverty. By eliminating interest, Islamic finance seeks to establish a more equitable relationship between parties, where profits and losses are shared fairly. This approach not only aligns with Islamic teachings, but also promotes economic stability and social harmony. Moreover, the risk-sharing aspect of Islamic finance introduces a level of accountability and transparency that is often absent in traditional systems. In conventional finance, risks are frequently transferred entirely to one party, leading to situations where individuals or businesses bear the brunt of financial downturns. Islamic finance, however, requires that all parties involved in a transaction share the risks and rewards. This principle encourages responsible decision-making and fosters a sense of mutual support, ultimately contributing to a more resilient and sustainable economy. Ethical investment is another hallmark of Islamic finance that has garnered significant attention in today's world. As global awareness of environmental, social, and governance (ESG) issues grows, the principles of Islamic finance align seamlessly with these concerns. By avoiding investments in industries such as gambling, alcohol, and arms, and by emphasizing ventures that contribute positively to society, Islamic finance provides a framework for responsible and sustainable financial practices. This alignment with global sustainability goals has further boosted its appeal, especially among younger generations who prioritize ethical considerations in their financial decisions. The global acceptance of Islamic finance has been bolstered by the proactive efforts of governments and institutions in both Muslim majority and non-Muslim majority countries. Nations like Malaysia and Saudi Arabia have established themselves as leaders in the Islamic finance industry, creating regulatory frameworks and fostering environments conducive to its growth. Meanwhile, countries like the United Kingdom and Luxembourg have recognized the potential of Islamic finance to attract investments and promote economic diversification, integrating Sharia-compliant solutions into their financial systems. The issuance of sukuk, or Islamic bonds, has been a pivotal factor in the global expansion of Islamic finance. Unlike conventional bonds, sukuk are structured to comply with Islamic principles, ensuring that they are backed by tangible assets and do not involve interest. This asset-backed nature provides an added layer of security and stability, making sukuk an attractive option for investors seeking ethical and reliable financial instruments. The success of sukuk issuance in international markets has demonstrated the viability of Islamic finance on a global scale and has paved the way for further innovations in the industry. In addition to its ethical and financial advantages, Islamic finance has also played a crucial role in promoting financial inclusion. Traditional financial systems often exclude individuals and communities who are unable or unwilling to engage in interest-based transactions. Islamic finance, by offering Sharia-compliant alternatives, provides an opportunity for these individuals to participate in the economy without compromising their religious beliefs. This inclusivity is particularly significant in regions with large Muslim populations, where access to ethical financial services can empower communities and drive economic development. The rise of Islamic finance has also been fueled by advancements in technology and innovation. Fintech solutions have enabled the development of Sharia-compliant digital platforms and services, making Islamic finance more accessible to a global audience. From mobile banking apps to blockchain-based smart contracts, technology has played a pivotal role in enhancing the efficiency, transparency, and reach of Islamic financial products. These innovations have not only attracted tech-savvy consumers, but have also positioned Islamic finance as a forward-thinking and adaptable industry. The integration of Islamic finance into mainstream financial systems has further underscored its relevance in today's economy. Financial institutions worldwide are recognizing the potential of Sharia-compliant solutions to diversify their offerings and tap into new markets. By incorporating Islamic finance principles into their operations, these institutions are catering to the growing demand for ethical and inclusive financial products. This trend has been particularly evident in the banking sector, where the establishment of Islamic windows and standalone Islamic banks has provided consumers with a broader range of options. Education and awareness have also played a vital role in the rise of Islamic finance. As more people become familiar with its principles and benefits, the demand for Sharia-compliant financial products continues to grow. Institutions and organizations have invested in training programs, workshops, and academic courses to equip professionals with the knowledge and skills needed to navigate the complexities of Islamic finance. This emphasis on education has not only strengthened the industry, but has also empowered individuals to make informed financial decisions. The impact of Islamic finance extends beyond the financial sector, influencing broader societal and economic dynamics. By promoting ethical behavior, fostering social responsibility, and encouraging sustainable practices, Islamic finance has the potential to address some of the most pressing challenges of our time. Its emphasis on equitable wealth distribution, for instance, aligns with efforts to reduce income inequality and alleviate poverty. Similarly, its focus on environmentally friendly investments supports global initiatives to combat climate change and protect natural resources. In the context of the global economy, the rise of Islamic finance represents a paradigm shift toward more inclusive and ethical financial systems. It challenges the status quo by offering alternatives that prioritize the well-being of individuals and communities over profit maximization. This shift has been particularly significant in emerging markets, where Islamic finance has provided a catalyst for economic growth and development. By channeling investments into infrastructure projects, small and medium-sized enterprises, and other productive sectors, Islamic finance has contributed to job creation, innovation, and improved living standards. The resilience of Islamic finance during periods of economic turbulence has further solidified its reputation as a stable and reliable system. Its asset-backed nature and risk-sharing principles have shielded it from some of the vulnerabilities associated with conventional finance, such as speculative bubbles and excessive leverage. This resilience has made Islamic finance an attractive option for investors and policymakers seeking to build more robust and sustainable economies. The cultural and spiritual dimensions of Islamic finance also play a significant role in its appeal. For Muslims, engaging in Sharia-compliant financial practices is not merely a matter of preference, but a religious obligation. Islamic finance allows individuals to fulfill their financial needs while adhering to their faith, creating a sense of harmony between their spiritual and material lives. This alignment with core Islamic values has resonated deeply with Muslim communities worldwide, driving the growth of the industry. However, the appeal of Islamic finance extends beyond its religious roots. Its principles of fairness, transparency, and social responsibility resonate with individuals and institutions from diverse backgrounds. As the world becomes increasingly interconnected, the values underlying Islamic finance offer a unifying framework for addressing shared challenges and advancing common goals. This universality has positioned Islamic finance as a bridge between cultures and a catalyst for global cooperation. In conclusion, the rise of Islamic finance is a testament to the enduring relevance of its principles in a rapidly changing world. Its emphasis on ethical behavior, social responsibility, and sustainability has captured the imagination of individuals and institutions alike, paving the way for a more equitable and inclusive financial future. As Islamic finance continues to evolve and expand, it holds the promise of transforming the global economy and inspiring a new era of ethical and responsible financial practices. The transformative potential of Islamic finance is evident in its adaptability to diverse economic contexts and its ability to address contemporary challenges. One of its key strengths lies in its capacity to integrate seamlessly with local traditions and cultures, making it a versatile and universally appealing financial system. This adaptability has allowed Islamic finance to thrive not only in Muslim-majority countries, but also in regions with smaller Muslim populations, demonstrating its broad applicability and relevance. For instance, in countries like the United Kingdom, Canada, and Australia, Islamic finance has gained traction as an alternative investment avenue for those seeking ethical financial solutions. Non-Muslims are increasingly drawn to Sharia-compliant products because of their focus on fairness, transparency, and sustainability. This growing interest has encouraged financial institutions in these regions to establish Islamic banking divisions, develop sukuk offerings, and launch Sharia-compliant investment funds. These efforts have created a dynamic and competitive market that benefits both consumers and businesses. At the same time, Islamic finance has contributed significantly to the economic development of emerging markets. By channeling funds into projects that align with Islamic principles, such as infrastructure development, renewable energy initiatives, and education programs, it has played a pivotal role in driving sustainable growth. In countries like Indonesia, Pakistan, and Nigeria, Islamic finance has been instrumental in addressing critical development needs, reducing poverty, and enhancing financial inclusion. One particularly noteworthy example of Islamic finance's impact is its role in supporting microfinance initiatives. Microfinance, which provides small-scale financial services to underserved populations, aligns closely with the values of Islamic finance. By offering Sharia-compliant microfinance solutions, Islamic institutions have empowered individuals and small businesses to achieve economic independence without resorting to interest-based loans. This approach has had a transformative effect on communities, enabling them to break free from cycles of poverty and build more stable and prosperous futures. Another area where Islamic finance has made significant strides is in the promotion of green finance and environmentally sustainable practices. The alignment between Islamic finance principles and environmental stewardship is natural, as both emphasize responsible resource management and the avoidance of harm. Islamic financial institutions have increasingly focused on green sukuk and other Sharia-compliant investment vehicles to fund renewable energy projects, clean water initiatives, and sustainable agriculture. These efforts have positioned Islamic finance as a leader in the global push for environmental sustainability. The integration of Islamic finance with digital technology has further amplified its impact and accessibility. Fintech innovations, such as mobile banking apps, peer-to-peer lending platforms, and blockchain-based smart contracts, have revolutionized the way Islamic financial products are delivered. These technologies have not only made Sharia-compliant solutions more accessible to consumers, but have also increased efficiency and reduced costs for financial institutions. The rise of Islamic fintech startups has created a vibrant ecosystem that combines traditional values with cutting-edge technology, paving the way for new opportunities and growth. The success of Islamic finance has also been facilitated by strong regulatory frameworks and international collaboration. Governments and regulatory bodies have played a crucial role in creating environments that support the growth of Islamic finance. By establishing clear guidelines and standards, they have provided investors and consumers with confidence in the integrity and compliance of Islamic financial products. Organizations such as the Accounting and Auditing Organization for Islamic Financial Institutions, AAOIFI, and the Islamic Financial Services Board, IFSB, have been instrumental in promoting consistency and transparency across the industry. Moreover, international partnerships and collaborations have helped Islamic finance gain recognition and acceptance on a global scale. Cross-border sukuk issuances, joint ventures between Islamic and conventional financial institutions, and participation in global financial forums have showcased the potential of Islamic finance as a viable and competitive alternative. These initiatives have fostered a sense of unity and cooperation among stakeholders, contributing to the continued expansion of the industry. Despite its remarkable growth, Islamic finance is not without its challenges. One of the primary obstacles is the need for greater standardization and harmonization of practices across different jurisdictions. While the diversity of interpretations and approaches within Islamic finance reflects its adaptability, it can also create complexities for international transactions and investments. Efforts to address these challenges are ongoing, with industry leaders and scholars working to develop frameworks that balance flexibility with consistency. Another challenge is the need to enhance public awareness and understanding of Islamic finance principles and products. Although significant progress has been made in educating consumers and professionals, misconceptions and knowledge gaps still exist. Addressing these issues requires continued investment in education and outreach efforts, as well as collaboration with media and educational institutions to promote accurate and accessible information about Islamic finance. The future of Islamic finance also depends on its ability to innovate and adapt to emerging trends and demands. As the global economy evolves, Islamic financial institutions must remain responsive to changes in consumer preferences, technological advancements, and regulatory landscapes. By embracing innovation and maintaining a commitment to ethical principles, Islamic finance can continue to lead the way in shaping a more inclusive and sustainable financial future. One promising avenue for growth is the expansion of Islamic finance into new sectors and markets. The healthcare industry, for example, offers opportunities for Sharia-compliant investments that align with the principles of compassion and social responsibility. Similarly, the education sector presents a chance to support initiatives that promote knowledge and empowerment in line with Islamic values. By exploring these and other sectors, Islamic finance can diversify its offerings and expand its impact. In conclusion, the rise of Islamic finance is a reflection of the growing demand for ethical, equitable, and sustainable financial solutions in today's world. Its principles of fairness, risk-sharing, and social responsibility have resonated with individuals and institutions alike, paving the way for a global movement that transcends cultural and religious boundaries. As it continues to grow and evolve, Islamic finance holds the promise of transforming the financial landscape and contributing to a more just and harmonious global economy. Through innovation, collaboration, and a steadfast commitment to its core values, Islamic finance is poised to shape the future of finance for generations to come. Certainly. Here's an expanded closing chapter, written in a warm, conversational, and engaging tone, while maintaining the Islamic essence of the content. Assalamu alaikum wa rahmatullahi wa barakatuh, my dear brothers and sisters in Islam, and all those who are interested in learning about the beautiful and ethical world of Islamic finance. As we come to the end of our exploration into the rise of Islamic finance and the exciting potential it holds in today's global economy, let us take a moment to reflect on why this topic matters so deeply for individuals, families, and societies. Islamic finance is not just about numbers or balance sheets. It's about upholding values that Allah has ordained for us. It's about living a life where every transaction, every financial decision, and every investment is aligned with the principles of halal and haram, clearly laid out for us in the Quran and Sunnah. This is an incredible blessing because it allows us to seek the pleasure of Allah, even in our worldly matters. In every aspect of our lives, from the way we earn to the way we spend and save, we are guided by a higher moral compass that prioritizes fairness, compassion, and justice. When we consider the growth of Islamic finance globally, we see a reflection of how Islam provides solutions for every time and place. Subhanallah, isn't it amazing how these timeless principles of equity and social responsibility can address the challenges of our modern, interconnected world? In an age where people are increasingly disillusioned with unethical financial practices, the steady rise of Islamic finance provides hope. It shows that a better way exists, a way that is not only profitable, but also just and sustainable. Islamic finance is unique because it takes the idea of wealth and shifts the focus from mere accumulation to responsible utilization. The Quran reminds us that wealth is a test, a tool, and an amana, trust. It is not something we hoard selfishly. Rather, it is a resource that can bring benefit to ourselves and others when used in accordance with Allah's laws. This concept has resonated with Muslims and non-Muslims alike, especially as people become more conscious of the need for ethical and socially responsible financial systems. As we look toward the future, the potential for Islamic finance to grow and touch the lives of millions, if not billions, of people worldwide is truly inspiring. Imagine a world where businesses operate ethically, where profits are earned without exploiting others, and where investments contribute to building communities rather than tearing them apart. This is the promise of Islamic finance. Let's not forget the personal impact Islamic finance can have. For the Muslim individual, it provides peace of mind and reassurance that their financial dealings are halal. Take the example of the halal credit card we discussed earlier. It's more than just a convenient financial tool. It's a way to engage with modern banking while staying firmly rooted in one's faith. When you know that your financial choices align with your beliefs, it brings a unique sense of satisfaction and closeness to Allah. But there's more to this story. Islamic finance isn't just about Muslims. Its principles of fairness, transparency, and ethical behavior resonate with people of all faiths and backgrounds. The rise of Islamic finance in non-Muslim majority countries, such as the United Kingdom, Singapore, and parts of Africa, is a testament to this. These nations are recognizing that Islamic financial practices can complement their existing systems, offering stability and inclusivity. This collaboration also presents an incredible opportunity for da'wah, showing the beauty of Islam through practical, everyday solutions. Think about how transformative it is for someone unfamiliar with Islamic teachings to experience a financial product that is riba-free and built on fairness. It might spark curiosity, leading them to ask questions about our deen. The ethical principles that underpin Islamic finance, such as avoiding exploitation, promoting social good, and sharing risks and rewards, are universal. When people see the positive impact of these principles, they are naturally drawn to learn more about the religion that inspired them. Islamic finance also encourages us to think critically about how we spend and invest. Are we supporting industries that align with our values? Are we contributing to businesses that harm society? Or are we uplifting those that promote the greater good? These are questions we must ask ourselves regularly. The rise of Islamic finance challenges us to re-examine our relationship with wealth and to see it as a means to earn Allah's pleasure rather than an end in itself. Moreover, the growth of Islamic finance has significant implications for poverty alleviation. Through systems like zakat, waqf, and profit and loss sharing, Islamic finance creates avenues for wealth redistribution. This is especially important in a world where economic inequality is a growing concern. By prioritizing fairness and social justice, Islamic finance provides a framework for reducing poverty and empowering communities. Imagine the transformative impact of businesses funded through halal means, creating jobs and fostering development in underprivileged areas. We cannot ignore the role of technology in this evolution. With the rise of fintech, financial technology, Islamic finance is becoming more accessible than ever before. Mobile apps, online banking platforms, and blockchain technology are enabling people from all walks of life to engage with Sharia-compliant financial products. Whether it's microfinance initiatives in rural villages or digital platforms offering halal investment options, technology is helping bridge gaps and bring Islamic finance to the forefront of innovation. As individuals, we have a role to play in supporting and advocating for Islamic finance. This doesn't mean you need to be an economist or a banker. It simply means making choices that align with your values. Seek out Islamic financial institutions for your banking needs. Opt for halal investment opportunities when planning your future. Encourage your local communities to learn about and embrace Sharia-compliant options. These small steps, when multiplied across millions of people, can create a powerful movement. And finally, my dear brothers and sisters, let us never lose sight of the spiritual dimension of this topic. At the end of the day, every decision we make, financial or otherwise, is an opportunity to come closer to Allah, subhanahu wa ta'ala. Islamic finance is not just about avoiding haram, it's about actively choosing halal. It's about striving for barakah in our wealth and recognizing that true success lies not in how much we earn, but in how we earn and spend it in the path of righteousness. May Allah grant us wisdom in our financial dealings, bless us with wealth that is pure and abundant, and guide us to use it in ways that please Him. Let us be ambassadors of Islamic finance, not just in our words, but in our actions, whether it's through choosing a halal credit card, supporting ethical investments, or educating others about the beauty of Sharia-compliant systems. Each one of us has a role to play in this incredible journey. So, as we part ways today, I urge you to reflect on the role of Islamic finance in your life and the lives of those around you. Share this knowledge with your friends and family. Discuss it in your communities, and most importantly, live it. Let your financial choices be a reflection of your faith and a source of inspiration for others. Jazakum Allahu khairan for your time, attention, and willingness to engage with this important topic. Your interest is a testament to the growing awareness of the value Islamic finance brings to the world. Remember to always stay curious, stay informed, and stay committed to the principles of our beautiful deen. Wa assalamu alaikum wa rahmatullahi wa barakatuh.